The price of the precious metal gold has accelerated since the 1st of March, gaining roughly 15% in value. Investors have flocked to the safe haven as geopolitical risks intensify around the world and central banks purchase more bullion. Ross Greenwood caught up with John Reid, senior market strategist at the World Gold Council, to understand what has been causing gold to do so well.
The most recent driver that we've seen, really since the 1st of March, has been speculative buying on the COMEX futures market in the United States, supported, I guess, by a bit of safe haven demand associated with Iran's attack on Israel. But that speculative buying on COMEX wouldn't have been able to happen if it hadn't had for two other major factors. Central bank purchases, which have been really strong since the middle of 2022, and then over the last few months, really strong retail demand for gold in China, both in jewellery, but especially in investment.
OK, let's go to China to begin with, because it's not just China. It seems as though they're wanting some sort of a hedge away from the US dollar. It's also India, it's also Turkey that have also been very strong purchasers at a central bank level of gold.
Sure, and the increase in central bank purchases we've seen over the last 2 years has been associated with what I describe as a soft de-dollarization, a move away by central banks from holding the vast majority of their reserves in US dollars towards a different mix. Now, that different mix in time will probably include the currencies of major emerging market powers like China, like India, etc. But those currencies aren't really ready yet for reserve currency status. So gold is acting as a decent proxy until they do. And why it's a good proxy is because, well, the International Monetary Fund recognizes gold as a central bank reserve asset. And also, gold demand is driven by the economies of these two countries, India and China, the second and largest consumer of gold. So that satisfies a lot of requirements, I think, for central banks that are beginning to slowly reduce the amount of US dollars in their portfolios.
OK, so the central banks are reducing the amount of dollars in their portfolios, but it seems also that even consumers are doing the same thing. Even in the United States, there's a move away from holding physical dollars to holding, as you say, as gold as a proxy for it.
Sure, although it is interesting that the strength we've seen in gold hasn't really been driven by Western buying over the last 12 months. And in fact, there's been a pretty big slowdown in the appetite from North American, well, US and Northern European buyers of physical coins and small investment bars. So this really has been an emerging market phenomena that's been driving gold over the last 2 years. And that's probably why gold has been able to ignore the typical drivers that would have been a headwind for it. The strength of the US dollar, high interest rates, the fact that the Fed is no longer expected to cut as much, maybe even at all, as it was a few months ago. Gold shrugged off all those factors and has continued to hit a series of new all-time highs.
And then take me to the supply side of gold. Is there any real suppression of the supply side? Given the fact, obviously, with gold prices being so strong, it makes a lot of mines that might have been otherwise questionable now become really decent prospects.
It certainly helped. There's no doubt that high gold prices have made marginal mines or marginal ore bodies within otherwise profitable mines able to be exploited. But to be honest, the gold price has been high for a couple of years. The gold mining industry has been doing pretty well. It's now just doing very well. So I don't see an enormous supply response coming from these higher gold prices, because I think the gold mines were pretty much accessing everything that they could already. And in terms of bringing new mines and projects on stream, the lead time on these is anything from 3 years to 15 years. So we'll only see the impact of these really strong prices starting to kick in a few years' time. We do expect gold production probably to break the all-time high this year, but that all-time high was set back in 2018. So I think the way I think about mine production is that it's been plateauing for the last 6 or 7 years and now has the potential, I guess, in the medium to longer term, to expand if mining companies pull the trigger on some of these new projects that they've been considering.
So then you talked earlier about, the friction in the world, the geopolitical situation, Ukraine, Russia, the sanctions on Russia, but then also China, of course, and its relationship with the United States. I just wonder how much of this is safe haven buying by people in some of those countries that may have significant disputes with the United States. And as you point out, that US dollars probably aren't the thing to hold anymore.
Yeah, that's true. But I think also it often represents a choice by investors and savers in emerging markets to try and reduce their dependency on their own domestic currency. So if you're sitting in China at the moment, the property market, which is probably where you've made most of your investments, has been doing pretty poorly now for the last couple of years. The equity market isn't great. There's concerns that the Chinese currency will weaken further. Gold is a great alternative to holding RMB-denominated assets, and I think that's benefiting there. Certainly that was the case in Turkey that we saw last year, ahead of the profound depreciation we saw in the Turkish lira. People in Turkey wanted to own hard assets because they expected the currency to fall after the presidential election, which indeed it did. Gold benefited a lot. So I don't think it's always about the US dollar. It can often be about concerns about domestic currencies, particularly within emerging markets.
So just tell me, is there any correlation that I should read into record prices for gold prices and a similar significant climb for cryptocurrencies, and in particular Bitcoin?
I don't know. I think they're very different assets. Bitcoin has benefited from the enthusiasm towards the space following the listing of cash ETFs in the United States earlier this year. And we saw a very rapid increase in the price of Bitcoin after those instruments were launched. It seems to have stabilized a bit now at around $60,000, $65,000 a Bitcoin. And a lot of the excitement that was there around the beginning of the launch of these ETFs has gone away. I also think about crypto assets as immature in many respects. We've only really had about 20 years of crypto assets, so people are still working out what to do with them, how to invest in them, getting comfortable with them. Gold is a mature asset, and it's fulfilled a role for thousands of years, and within the monetary system, certainly for hundreds of years. People understand what gold does and how to play it. And I think it's reacting to its traditional role as that of something which you want to hold during uncertain times. Now, those uncertainties can be driven by lots of factors, whether it's economics, whether it's geopolitics, whether it's even a pandemic, as we saw back in 2020. So the fact that gold and Bitcoin are going up at the same time, or have been going up at the same time this year, I don't read too much into it. A very different asset.